Hello, it's Greg Britton, your Spokane mortgage strategist. It is April 25th, Monday. Time for Greg's Home Update. A look back last week's housing and mortgage rate, mortgage bond market. Look forward to what we have this week coming up. So last week, as you can see in the newsletter, the existing home sales month over month increased again. This is 6 of the last 8 months that the existing home sales have been climbing. And of course, existing homes, the ones that are already built, not new construction, but that's a good sign. We also saw, though, a decrease in the median home price, and that's probably due to foreclosure and short sales, so people buying up that inventory. So an increase in sales volume in units, but a value decrease slightly. But overall that's good news, because we need to work through those foreclosures and short sales if we're going to get back to a nice, stable, kind of normal. If you imagine what normal housing market is these days, I'm not quite sure, but that'll help us get back to some value stability for sure. So that's good. As far as mortgage rates and mortgage bonds, last week the 4.5% Fannie Mae bond, which is the one that the market's tracking most closely, that has to do with your mortgage rates, had a fairly stable week. It ended up about where it started, and that kept mortgage 30-year rates anyway just below 5%, which is good if you're looking for a home or looking for a mortgage. Something pretty significant happened today, though. There was some heavy buying from Asia in mortgage bonds this morning, and it sent the bond price up above the 100-day moving average, which is pretty significant. That 100-day moving average has been a very strong ceiling. The bond hasn't been able to break through it, and that's basically where the mortgage bond buyer, that's their top dollar they would pay, and every time it hit that, they would retract. But it actually went above it and stayed above it and closed above it, and so that's pretty significant. And that could be, they could be hedging that, because there's really no reason for it per se, but they could be hedging that Ben Bernanke, the head of the Fed, is going to give a press conference after the next Fed meeting when they decide the Fed policy. Are they going to raise the Fed funds rate or not, or what's their outlook on inflation? And they must be hedging that he thinks inflation's kind of out in the distance and not a real threat, because that's the only thing that makes sense, to be paying that much money for the bond. But again, great news for people shopping for a mortgage, because the higher the bond, the better the mortgage rate. So we'll see how that plays out, and if it holds true, and see what Mr. Bernanke has to say there later in the week, and what these other economic reports that are coming out are going to, what influence they'll have on the bond as well. So I'll be tracking that as always, and get back to you next Monday. Have a great week.